You may well have heard of a bridging loan, but do you know what it actually is? I'm Nicola Hume, and in this episode, I'm going to be guiding you through bridging loan must-knows and why you might need one day. Now, whenever you're talking moving and mortgages, it's always best to talk to a mortgage broker. They are the experts who are able to recommend the best financial path when you're buying your home. There is a link below that will connect you to an award-winning team of advisors, so why not go ahead and get started? A bridging loan is a type of short-term finance. It's typically used if you want to buy a new home before selling your old one, and you need the cash to bridge the gap between your sale and the purchase. You can usually borrow a minimum of £5,000 and up to £10 million. The loan will need to be secured on something you own, such as property or land, and exactly how much you can borrow will depend on the value of the property you put up as security. Apart from the situation where you want to buy a new home before you've sold the old one, other bridging loan situations might be buying a property at auction or buying a property to develop. As with any finance, when you take out a bridging loan, you need to have a plan to pay it off. Bridging finance tends to be quite expensive, so if you don't repay the debt quickly, the costs can really add up. Paying it off usually involves selling the property you currently own, refinancing with a traditional or a buy-to-let mortgage, selling a business asset, or using money released from an inheritance or divorce settlement. There are two main types of bridging loan: open and closed. An open loan doesn't have a fixed repayment date, although you'll usually need to pay it off within a year. As it's so flexible, open loans are quick to set up, but usually more expensive than closed loans. With a closed bridging loan, there's a fixed term, usually a few weeks or months. Now, the other terminology you'll need to get your head around with bridging loans are first and second charges. So, what does this mean? Well, as I explained, a bridging loan is secured against an asset you own, typically a property that you're planning to sell. In this case, the lender will place a charge on your property. This is a legal agreement, which means the lender can force the sale of your property if you fail to pay the loan on time. If you own your property outright, the bridging loan will be a first charge lending, meaning the lender will be first to be paid from the proceeds. If you have a mortgage on your property, the bridging loan will be a second charge lending. So that means if you don't pay off the bridging loan on time, your property will be sold and your mortgage lender will be paid first, and then the bridging lender. As you can see, there's quite a risk attached to bridging loans, which means that they tend to be expensive compared to mortgages and other loans. Interest rates are expressed monthly rather than annually, as most people take out bridging loans for a few weeks or months, not years. Interest is typically 0.5% to 1.5% per month. If that was an annual percentage rate, you'll be looking at anything between 6 and 20%. On top of that is a setup fee of about 2% of the loan amount, and potentially valuation fees, legal fees, and broker fees as well. The advantages of a bridging loan is that the money lands in your account quickly, and you can borrow large sums. You can usually set the terms of how long you'd like the money for, and all of this can allow you to secure a property you really want to buy if you haven't yet sold your current home or stop a property chain from collapsing. The downsides, as we've already discussed, are the bridging loans are expensive, and you risk losing your home if you can't repay the debt on time. Nevertheless, if a bridging loan is the right way forward for you, the first step is to go directly to a specialist lender or via a broker who can help you work out the best deal for you. You can also have a look online to get an idea of costs and what you might be able to borrow. And if you're buying at auction, you'll often find bridging lenders there on the day, ready to arrange same-day finance. I hope this has been a useful insight, and make sure you subscribe to the channel and hit the alert button for more insider info. And I'll see you next time.